I'm going to introduce you to the technique that made me a trading pro. The technique that's kept me going for the last 30 years in trading. I've been doing this for a long time. I wish I'd known this technique right from the start. There was a point in my trading career where I got that aha moment, that moment that came to me and said, oh, this is how you do it. But first, before we get to the technique, before we get to the strategy, let's go to the charts and let's go and have a look at trading system, a price action system that's going to give you the high probability trade. But remember, just remember, the system, the high probability trading system with little squiggly lines and candles and charts and all those nice little things, that's not what's going to make you the money. What's going to make you the money at the end of the day is the strategy and the business plan behind it. The technique, my technique, the technique that I've used for 30 years is what's going to make the difference. What you have to understand in the markets, guys, is that the market is a 50-50 game. Hey, it's Trading with Rob. For those of you who don't know me, I'm Rob. And for those of you who do know me, I'm still Rob. It's Coffee with Rob as well, so we might as well have a wee sip of coffee. Yes, the market is 50-50. And why do I say the market is 50-50? Because the market's made up of human beings. So many of you, I've noticed recently in particular, especially with the younger traders, the guys that are getting into the market that were maybe born into computers, born into mobile phones, and born into all this marvelous AI technology that we have these days. And by the way, this video is real. I'm not an AI bot. I'm a real person. I'm a real human being showing you how to trade. What you have to understand is the market is made up of real human beings, not AI bots, not mathematics, not algorithms, not fractal stuff. The market's far more subjective than you would ever believe. It's not objective at all. It's a human being that's making a decision on the other side of that screen. So what you're actually looking for in a high probability trade, what you're actually looking for is liquidity. What you're looking for is where all that money is that the other traders are leaving there for you to pick up. They've got their orders in place. They've advertised them to you. They've put their stop losses in. They've put their take profits in. There's loads of money just lying there. It's called liquidity. It's just waiting for you to take it. It's not an algorithm. It's not maths, and nobody's hunting out your stop loss. Let me tell you that now. The pros are not looking for your tiny little stop loss. They're looking for huge sums of liquidity as well. That's how they trade. How do you think the pros actually trade? Do you think that they do it on some kind of mathematical AI algorithm and they allow some bot to trade for them? No, they don't. These big companies employ professional traders, people who know loads about finance and the markets and the ins and outs. They employ these people to make their trades and to buy and sell in the markets because they know what they're looking for. They're looking for that liquidity so that they can buy into certain products that are going to make them profit sometime in the future, because absolutely everyone who trades in the market is trying to make a profit sometime in the future. I don't know anybody who gets into trading because they want to lose. I mean, that's kind of insane on its own, don't you think? That would be crazy just to buy into a market to lose. Absolutely everyone buys in to win. And that's what makes it 50-50 at the end of the day. Guys, let's go and have a look at the charts. Let's go and see what kind of system you can use for the high probability trades, and then I'll talk to you a little bit more about the strategy after we've been to the charts. Let's have a look at the price action system that works so well with my technique. It sort of just fits into place. Guys, most traders lose money. If you're unsure, you probably shouldn't be trading. Trading is risky, and it always will be, because trading is a 50-50 game. Let's have a look. Let's see what we can do. Let me just take this out of the way. Those are the trades that we have open at the moment, and this is a $25,000 account, so it only risks $250 per trade. Right, you know my strategy. If you want to know my strategy in detail, watch to the end of the video. I will be showing you after the charts what the strategy is all about, and you'll get all the information that you could possibly need from that. So what do we do? How do we work this strategy? Well, there's three ways that we trade. Literally three ways. We trade with the trend, or we trade in a range, or we counter trade. There's no other way. There's no better way to trade it. Now, what I'm looking at on this particular trade is I'm looking at if this This is the euro US dollar. If this comes down and it takes this demand level here and it takes money here, there's liquidity, and then it'll probably carry on going up in this trend because the trend is your friend. But on the flip side, this could also be breaking the trend and breaking to the downside, giving us a counter trade. So we've got to keep an eye open for that. But how do we get our levels? So we can take any old trade here, any old position, any old thing. So what I'm going to do, I'm just going to delete all of these levels on this, and I'm just going to take this product and I'm going to use it to show you how to grab your levels or how to trade. Now, the first thing that we've got to do when we're doing price action, we're trading on the 4-hour chart, and it's coffee with Rob. Lovely, lovely. Right. So the first thing we've got to do, guys, is we've got to go to the day. We take our levels from the higher time frame because they're more accurate. There's more information available in the higher time frame. It's the same as if you do an experiment. You put 5 guys in an office and you tell them to test the system for you. 3 of them come back and say, hey, it's great, and 2 of them say it's rubbish. And you start your billion-dollar company based on that information. Whereas if you take 1,000 people and put them in a hall, say, test this system for me, and 800 of them come back and say this is good, then you might look at that sample size and say, I'll start my billion-dollar company based on that information. Same goes for trading, guys. If you take information on a 5-minute chart, it's like having 5 people in a room starting your company for you. If you take your information from a day chart, it's like having 1,000 traders in the room giving you your information on your system. So there, now you've got your day chart, but you don't want to take your levels from the candles. And I'll tell you why. We want to trade with the candles because we want to see the red ones, we want to see the green ones, we want to see the tails, we want to see the shapes. It gives us a lot of information, right, when we're trading. But where it doesn't help us is when we have spikes because someone stood up and said something in a Fed meeting or something or in the news. That really doesn't help your trading. So what you need to do is you need to change it to a line chart. A line chart is far more accurate because it gives you closing prices. Closing prices are what you want in the market because closing prices tell you what the price is on that day. That's all the information in one point. Now what you do is you look for the resistance level. What is a resistance level? It's an area of liquidity because every time the price gets there, it comes back. Look how many times it comes back off here. So that's what we're looking for. So what we're going to do, if it allows us, is to draw a resistance level in here. Now we know that that level on the day chart is the resistance. So every time the price gets to that level, what does it do? It takes money and it goes down. Now, at the bottom, there will be a support level. A level where every time the price gets there, it kind of goes up. It's broken to the downside here, so it's gone quite far down. So I'm not seeing a level at the bottom here. But that is not a train smash because previously the level would have been around here. It's broken through that level. And if it's broken through a level and it's gone back and retested it and carried on down, that's a serious move. So it's broken through that level. That level is no longer valid. It's broken, gone. Are you looking for a level below that? Is there a level below that? Can't see one at the moment. So we're going to have to deal with what we've got. What we have, and let me show you how easy it is to deal with it, actually. So instead of saying, well, I need to draw a level in here, I'll look at the level and I'll say there's probably a level down here. There's probably a level down here, 35,000. I'll deal with that. But I want some serious information. So what I do, I draw a trend line in. That's a trend resistance. And then I'll draw one in at the bottom as well, perhaps, just to give me some information as to where this trade might go. Now I've got more information. It's not perfect, but it's okay. I can actually take that, put it up there, and it'll actually give me a bit more of a clearer picture of what's actually happening in this market. So what I'm looking at here is a scenario where it's in a trend to the downside. If it breaks below this level, it's going further down. If it breaks above that level, it's going back to the upside. But now this is very vague. So what I would rather do is delete that and say, let's get it a little bit tighter. Let's get a little bit more information out of this. Let's bring it right into there. Let's bring it really close. Now I've drawn a really tight trend resistance in here. Now what I do, take it back to the candles, take it back to the 4-hour chart. Let's see what we've got. Now you'll see a lot of these prices have broken through here because it's candles. If you take it back to the line chart, you can actually correct it a little bit on the 4-hour. Just take it up a little bit like that. Just make it a little bit close, a little bit less close. It's supposed to touch 3 points, but you know what? 2 points is not that bad when you're playing around like this. And then let's just take it back to the candles. Now you've got a much clearer picture of where you are. Now all you've got sticking through here are tails. Tails don't matter, as I've told you before. What you're looking at is the closing prices. Now you've got a trend resistance. If this breaks through there, gives you a green candle to the upside, that tells you that this guy is going long again. And you can take a long trade. But at the moment, it's in a trend and it's bearish. So if it bounces off there, like with that red candle, you're going short and it's going to continue on to the short side. There is a slight at the bottom here, a slight support, a small support level that you might be looking for. Keep your eyes open for that. There might be some money lying there, but not a lot. My opinion is that it'll hit that trend resistance, carry on to the downside, and keep on going down. Now, what you would normally have, you would have your resistance up here, you would have a support level down here. But as you saw, there's not much support at the bottom down here. So what we're looking at is where can this go? Effectively, it's great if it goes red and it starts going down, it can go as far as you want it to. But if it goes green and it breaks through there, starts going back to the upside, your risk to reward is good, your bottom is probably there, and it'll probably go all the way to the resistance. That's just a bit of simple price action. If you want to know more about price action trading and high probability trading, go and look at my other videos where I give you a lot of information on different ways to do this and different ways to handle support resistance, trend lines. Trend lines are actually part of support and resistance. You get trend support. I like using trend resistance, trend support, just to give me the breakouts and to tell me which way the trade is going. And then you can also use supply and demand to give you a little bit more information on your trades. If you want to see that, there is a video on that as well. But go and watch my strategy now after the charts. Go and see my strategy on how you actually use this to make some money. So now you've seen the charts. Now you know how to trade with price action. Now you know how simple it is to trade with those charts. And to be fair, I could teach that to a primary school child and they would know how to do it. Most of you go on a course and you come back believing that the market is all objective and it's all about maths, and you've learned all the abbreviations and you know everything about the stock market and Forex trading and commodity trading and whatever else and indexes, and you can name everything and you actually know how the system works. And there's so many systems in the market, but you went on a course and you paid for a system and it actually works for you. What you have to understand though is that the system's not going to make you money. A win rate is not going to make you money. All a win rate's going to do for you is give you a win rate, and at the end of the day it's not really going to give you a profit, it's just going to give you a win rate. You might not understand what I just said there. Okay, if you make 8 wins in a row and you make $10 on each win, how much have you made? $80? Bully for you. And on the 9th trade you lose $200. How much did you make? I know you didn't make anything, you actually lost $120, but you got a win rate. Wow, yippee, got off with my win rate. No, win rates are worthless to you, to me, to everyone in the world. All they do is give you something to boast about. You need a strategy. You need a business plan. You need a proper business plan when you get into the market. It doesn't matter what time frame you're trading on. Lately, I've been trying to show people on the live shows what 5-minute trading is like. Unfortunately, we're winning. Perhaps we'll lose soon. Because that's the point. You win, you win, you win, you win, and then suddenly you take a big loss, and that's where it all comes in. You've got to have a business plan. You've got to have a strategy. If you have a business plan and a strategy, then you're actually not scalping, because a business plan and a strategy means that you're working to a specific position trade. It means you're a position trader. It really doesn't matter whether you're trading on 5 minutes or 5 days or 1 day or weekly charts, it really doesn't matter. As long as you have a plan, then you're positioning the trade. And that's what I show, is how to position trade. This technique always works, always wins. But before we start the technique, let's have a sip of coffee. Because that's always, always, always important. So here's the strategy. You've been waiting for this, clearly. I mean, you've been sitting here watching this video the whole way up to now. And look, if you've watched the video all the way up to this point and you're interested in knowing what the strategy is and you haven't subscribed to my channel, you really need to do that, guys, because then maybe I am of some interest to you or of some use to you somewhere down the line. And for those of you who want maybe trade of the day and a little bit more perks, there is a membership that you can join as well down the big button, the big giant button below the video there. It's all handled by YouTube at the end of the day. The strategy that you've been waiting so long for. Firstly, what you do is, if you have a, say, $100,000 account, and I'm just going to use that as a round figure again because it's just easier to use, right? You have a $100,000 account. What you got to do is say, I'm going to risk 1% on every single trade, and 1% of $100,000 is $1,000. So I'm going to risk $1,000 on every single trade I take. Very important part of the strategy is to keep the risk the same every single trade. Doesn't matter if you favor that over that, or you feel better about trading this over that, because if you trade bigger on one and less on the other, you're going to lose on the one that you traded bigger on. That's normally the case. But if you keep your risk the same, then the strategy will work, because the strategy is simple. In all high probability, if you take 10 trades, it's like a coin flip. If you take 10 trades, you should win 5 and lose 5. High probability, it's 50-50. What you want to do is you want to make more on the winning trades, lose less on the losing trades, so that you make a profit. Thus the risk of 2-to-1 that we always talk about, and you guys go, oh, the 2-to. No, don't worry about it. We'll get to that in a moment. As long as it's more than you're risking, but keep the risk the same on every single trade. But how do you do that? How do you do that when you're trying to put a stop loss in the market? You're trying to work out what your stop loss is in the market. And to do that, I mean, your stop loss has got to be in different places, and it's got to be at different distances away from the cost, hasn't it? Well, it's really simple, guys. All you got to do is look at the trade that you want to take and say, where do I want to put my stop loss? That's the first thing you look for. Where's my invalidation area? Forget about the profit. Look at where the trade will be invalid. Look at the stop loss area. I want my stop loss there. Make sure it's an invalidation area, an area where if you look at that trade, you'd like, I wouldn't take that trade. That's an invalidation area. That's where you want your stop loss. Now you simply work out how many lots, how many pips, how many points, whatever it is you're trading, it is back to the cost area. How many can I take? Don't worry about, I must trade one whole lot or half a lot or 20 lots. Or don't worry about how big your trade is. Worry about your stop loss and simply work out how many lots you can take back to the cost. Once you've worked that out, now you've got the size of your trade. Once you've got the size of your trade, you just need to work out if it's got a good risk to reward. And you know that based on the charts that we just looked at, you're looking at the high probability. And if you're looking at the high probability, because human beings are creatures of habit and they'll probably do the same things over and over again, then all you have to do is simply look and say, will this trade give me more profit than I'm risking? Because I'm not going to take a trade for the possibility of making a $50 profit if I'm risking $1,000, because that's just like silly. I at least want to make $1,500 or $2,000 or maybe even better $3,000 on a trade that's risking $1,000. If I see that's a possibility, you don't just put a 2-to-1 in willy-nilly like, oh, I've got a 2-to-1. No, you got to put it in with the possibility that it's actually going to work, that it's actually going to give you that result that you're looking for. You take it, you put it in, there's your trade, bully for you. All you got to do then is learn how to trail your stop loss up. If you want to know more about how you trail your stop loss up, watch those videos that I've put out there for you. Go and check out the strategy. I'll show you in detail how to work out the strategy of following your stop loss up, maybe even adding to your trades. Guys, I hope that system works for you. I hope that strategy works for you. If you've got any questions, leave them in the comments. I'll put them in the videos. I'll answer them on the live shows, and I'll answer them in the videos for you. Guys, thanks so much for watching. Don't forget, go and watch how you can trail your stop losses up and learn how to take your profits. Thanks for watching, guys. Till the next one. Cheers, ciao, and bye.